Hello everyone, welcome to my channel. Today I'm going to talk about General Ledger. Before I get into the video, be sure to subscribe and leave a comment below saying I subscribe. I will try to personally reply to your comments. Let's get into the video. A General Ledger is a financial data record keeping system that includes debits and credits account records that are confirmed by a trial balance. It keeps track of all financial transactions that occur during the life of a running company and stores account information that is required to compile financial statements. Transaction data is separated into accounts for assets, liabilities, owner's equity, income, and expenses based on the type of transaction. A general ledger is the cornerstone of an accounting system that stores and organizes financial data necessary to prepare the financial statements for a company. Individual subledger accounts are specified by the company's charts of account and transactions are posted to them. The transactions are subsequently closed off or summarized in the general ledger, and the accountant creates a trial balance, which is a summary of the balances of each ledger account. The trial balance is verified for inaccuracies and changed as necessary by posting more entries, and the adjusted trial balance is then utilized to construct the financial statements. Businesses that utilize the double entry accounting technique, in which each financial transaction impacts at least two subledger accounts and each entry contains at least one debit and one credit transaction, use a general ledger. Journal entries are double entry transactions that are posted into two columns with debit entries on the left and credit entries on the right, and the sum of all debit and credit entries must balance. The following is the accounting equation that underpins double entry accounting, and that is assets minus liabilities equals stockholders' equity. This format is followed by the balance sheet, which displays information at the account level. In the short term, assets portion of the balance sheet, for example, many asset accounts such as cash and accounts receivable are listed. The accounting equation requires that transactions posted to the accounts on the left of the equal sign in the formula equals the amount of transactions posted to the account or accounts on the right. This is how the double entry accounting system works. The balancing rule applies regardless of how the equation is written. For example, assets equals liabilities plus stockholders' equity. The general ledger's transaction records are collated and summarized at several levels to generate a trial balance. Income statement, balance sheet, statement of cash flows, and a variety of other financial reports. Accountants, corporate management, analysts, investors, and other stakeholders can use this information to evaluate the company's performance on a regular basis. The financial statement data often does not tell the full picture when expenses increase in a certain period or a company records other transactions that affects revenues, net income, or other critical financial measures. Certain forms of accounting problems necessitate going back to the general ledger and digging into the detail of each recorded transaction in order to discover the problem. This can often include going over dozens of journal entries, but it is critical to keep your company's financial statement error-free and legitimate. An example of a transaction from a balance sheet is if a company receives payment from a client for $500 invoice. For example, the company accountant debits $500 from the cash account and credits 500 to the account receivable to complete the transaction. The debit and credit balances on the ledger are equal. One asset account, cash, is boosted by the 500, while another asset account, accounts receivable, is decreased by 500. As a result, both the increase and decrease only have an impact on one side of the accounting equation. As a result, the equation remains balanced. The formula for the income statement is revenue minus expenses equals net income. An accounting transaction might affect both the balance sheet and the income statement at the same time. Consider the case where a corporation bills a client for $1,200. The accountant would record this transaction in the accounting ledger by debiting $1,200 from accounts receivable, a balance sheet asset account, and crediting $1,200 from the revenue and income statement account. Both debits and credits increase by $1,200, but the totals remain unchanged. What is the function of the general ledger? A general ledger is used in accounting to record all of the company's transactions. Transactional data is categorized into assets, liabilities, income, expenses, and owner's equity in a general ledger. The accountant prepares the trial balance once each sub-ledger has been closed out. The trial balance data is then used to construct financial statements for the company, including the balance sheet, income statement, statement of cash flows, and other financial reports. The general ledger technique of storing firm financial data is used by a corporation that uses a double entry accounting approach. Double entry accounting is defined as when each transaction has an effect on at least one debit and one credit transaction. To put it another way, each transaction is split into two columns, a debit column and a credit column, with totals that must add up to zero. The following equation applies to this balancing rule. Stockholders' equity equals assets minus liabilities. An example of a general ledger transaction is, consider the following scenario. A corporation receives a $5,500 payment for its services from a client. The accountant would then add 5,500 to the asset column and 5,500 to the accounts receivable. The equation remains balanced because the corresponding increase and drop only affect one side of the accounting equation, the asset side. Thanks for watching this video and do not forget to subscribe to my channel.